Hello, welcome back to the home of the worst investor on YouTube. So, not going to camera today because I'm recording this like 7:26 because I'm a bit early. So, it's the 2nd of July. It's the end of the quarter. We will look at the portfolio in a minute. There's been a couple of changes. But this month had a interesting amount due to a rather hefty return of capital, which we'll get to in a minute. But we kicked off the month with 13 pence from USD Treasury bond, then 37 pence from USD Emerging Markets Government Bond. GCP, which is a quarterly, came in at £17.50. 10 pence from the Eurozone Government Bond. 68 pence from the UK Gilt, which is UK Government Bonds. 35p from the Nasdaq 100 covered call, and 32 pence from S&P 500 covered call. Then we had 19p from the Income Shares Gold Plus Yield, and here's the one. It was £154.52 return of capital from VSL. So that means the current value of VSL is now down by that amount, as well as it's just down overall. So what I find interesting in the return of capitals is that because they keep the amount you've lost from the selling of shares that everybody else has been doing, and then you get return of capital, even though it's not taxed in terms of, if this was a general investment account, this wouldn't be taxable amount, but it's non-tax because it's in a if this is just a standard amount I earn from it in a general account, this would be taxed, but because it's return of capital, they don't tax it, right? It's capital being returned as opposed to income being received. Anyway, all of this would be tax-free in an ISA, but my point being is that because that value is much lower again, it's like, well, it's a return of capital, great. Do I put it back into the stock, or in this case, it's an investment trust, or do you put it to work elsewhere? So when you got lots of things already down, it's like a bit of a psychological hit. Then you got the amount for the money for the month, but then the holding is going to be consistently down by this month every month. So I don't know. It's I used to enjoy them, but this last sort of 8 months, it's been a very different perspective with this portfolio, and maybe dividends in general. So there we are. So we had 54p from US Municipal Bond, £1.68 from the US Morningstar US Energy Infrastructure, 62 pence from Invesco, 62p from the S&P 500 High Dividend Low Volatility, and then 45p from Preferred Shares, 58 pence from iShares Emerging Market Dividend, 19p from the JP Morgan USD Emerging Market Bond. Tesco then paid £9.45. I've since sold those because they have the profit. I look to pick them up again when it goes back down to the price that I paid for them. See what I'm trying to do there? So, or worst case scenario, I pick them up right before the next dividend is due. Then we had 35p from BP. The last two then were £10.31 from the US Short-Term High Yield Corporate Bond Index and £18.88 from Renewable Infrastructure Group. That came to a monthly total of £217.21, but obviously a good majority of that is going to be 154 quid. And then over to the portfolio, which is what you're mainly here for this month. So we still got Aberdeen. So here we are. So this is the current net, what is it called? Net deposit return, right? I'll show you the actual bad number in a bit. So this net deposit return is 16.4% for the max amount. So if we look at the 1 year, it's up 9.1%. It's not bad. 10%, 10.6% for the 3 month, 5.8% for the month, 0.8% of the week, and 0.1% of the down. None of these have been red this week, so that's good. But there is a big red number we'll get to. So we kicked off with Aberdeen Diversified Income and Growth. Now this is actually due to be essentially wound down and closed out. So I'm just going to basically see how that one works, because they've not been bought, it's not been taken over or merged or anything. They're going to eventually just sort of sell off everything, return the capital. So I'm kind of just interested to see how that process works. And so I know that anything in future that's going to be wound down, I have an idea of the process is going to play out. So we've got Shura then, they're down 10.39%. BP is only down 9.13%, which is apparently being rumoured to get taken over by Shell. So that's another supposedly British multinational company gone in that case. Then we got Chemring, they're up 47.44. I knew I should have bought more shares, but there we are. And then we had Diverse Income Trust, that's up 16.41%. Don't particularly know why, because that was quite a bit down and come back up. Honestly, some of the incentive buying around some of these makes no sense, but hey, it's a nice amount. Again, probably should put more shares, but I was happy at the time with what I had, because I had quite a lot of holdings in the portfolio. So if that ever dips back down, I'll pick up more. Ecora Resources is down 40.47%. Oh, here's a bad one. Facilities by ADF down 70%. 70.9. It might be 71. Foresight Solar Fund's only down 5.37%. GCP is only down 16.71. That's not bad. Plus we've had a payment from them, so that's good. Global share, the Global X Nasdaq 100 core is down 14% and 11.89. But of course, some of these do include the FX impact as well. So, for example, on this one, the FX impact was £3.5. A couple of these was quite a bit of an impact. So then we've got Greencoat UK Wind is down 11.69%. Income Shares Gold Plus is up 8.57%. Invesco Morningstar US Energy Infrastructure is down 12.79%, with £9 being from FX impact. Preferred shares is down 10.63%. Then we've got the Invesco S&P 500 High Dividend Volatility, that's down 10.7%. So what they tend to be is they'll buy whatever stock is, or income trusts. They have a lot of income trusts in the US that doesn't move much in terms of price, and they have a nice high dividend, and that's what you're there for, it's income. Then we've got iShares EM Dividend, that was only down 1.89%. Global Shares and iShares Global Inflation Linked Government Bond is up 2.28%, yay. And then iShares JP Morgan USD Bond is up, US Emerging Market Bond, I'll get it right one day, up 2.71%. Sainsbury's is up 6.7%. I'm due a payment off them now this month. What is it? 11 July. Then we got Lowland Investment Company up 12.69%. Again, this is another one where it went down quite a bit and then came shooting back up. No particular reason. It's just how things seem to go now and again. And then we got the US short-term high-yield corporate bond only down 0.65%. That's nearly in the red. Nearly in the green. That is my most stable one. It's actually gained nicely lately. So I don't know. Do you see it as a good thing or a bad thing on that one? Because maybe a lot of these corporate bonds are catching up and they're nicely sort of paying out. So it seemed to be less risky, or have they been more risky in the past, and maybe the risk is on now, so the price has gone up. I don't know. Usually if it's down, I'd have thought it'd be down because it's considered to be companies not exactly hitting their finances well to be able to cover short-term debts. And then we got primary health properties. That was down 13.07%. Real estate credit investments down 6.4%. Again, this is a nice stable one. It rarely moves and pays nicely every time. That's 44% down now for a regional REIT, which is improved from where it was. No longer my worst performer, weirdly. And we got renewable infrastructure down 20.73%. Value and index property Inc., however, is up 5.24%. It's one of the ones I probably should have added more to. Well, I like it where it is. Again, too much holdings, but I needed some ETFs just to try and stabilize the portfolio a tad. So then we got the Vanguards. Here we go. So Eurozone government bond is up 0.94. Then we've got FTSE 100 up 6.53. FTSE 250 is up 1.91. Emerging markets is up 1.51. The S&P 500 is up 1.72. The UK government gilts is down 2.26. Emerging market government bond is up 7.86%. We are now live. Oh, that's the FX impact changing it. And then we've got the USD Treasury bond down 4.59%, followed by VPC special lending, which is now the worst one, down 77.0%. But of course that paid me a nice big amount. So for that big number, let's see how he's doing. Cost basis, the amount invested, that's 13,307.66, and the unrealised loss, 20.89% at £2,779.83. Also interestingly, my total dividends for the year now stand at £596.52. So, not bad. Preferred if that number was more because I didn't sell off a ton of shares and that sort of stuff. Even the likes of, was it Sura? I sold a bunch of. It was like just over 1,200. That decided to pick up. Nicely recover the share price, and then it's like, well, I would have lost less on selling those shares. So, you know, it is what it is. It's been a learning curve this year. Where they say don't let emotions get involved. Absolutely do not do that. Hence why I'm the worst investor on YouTube, I'd imagine. So, with that said, have a good month now for July. And hopefully things will be better now by the next quarter. However, we'll see what the dividends for this month is going to be. So, we've had, I think, one yesterday came in. So, there we are. All the best. It's a bit of a crazy world out there at the minute, so good luck. Enjoy this month's investing, and I will see you next month on time. Till then.